Hi there, I'm Will. I work on the dealing desk here at Capital Spreads, and as with every week we're joined by Bill Hubbard, who is a bit of an expert on the markets, and he's going to give you his take on last week, this week, and what's just happened. Bill, bit of a shock.
Well, no, I wouldn't say a shock. I was going to say, if we'd had this discussion 2 weeks ago, the market was expecting the Q&A today to be, well, Super Mario, Magic Mario, what do you expect? Yeah. What are you going to do with the euro at 139, 140? But as we've seen in the last 4 or 5 days, with the data being unemployment all-time high, inflation going nowhere but down, and the euro struggling at 135. And if you look at the most recent Bloomberg economics scenario, out of 70 analysts that they interviewed, only 3 were expecting a rate cut today. I was not one of those. I was expecting the ECB to prepare the market for a rate cut next week.
So it's fill you all in. The European rate has fallen from 0.5% to 0.25%, which is definitely a bit of a shock. The euro's lost 200 pips against the dollar, in 15 minutes, and a lot of people probably caught out. Do you think? Or?
Yeah, I think so. If you were a technician, 137.20, which was the yearly high or 2-year high. I mean, the market had been a sell from there, okay? And once we really struggled at 135, it really was basically a net sell there. Now, the interesting thing is going to be, not only, as you mentioned, we saw the euro of 200 pips in a matter of seconds. It's going to be quite interesting to see, although euro sterling is still off, I think, 83 the last I looked. Also, we saw dollar rallying against everything. So really what we've seen is people that were caught out maybe by the Fed last week, which I was slightly caught out. They were less dovish than what I expected. So you did start seeing people starting to think about putting on long dollar positions. But as we saw today, the dollar's rallied against most all the currencies. We've seen gold at one point.
So why is that? Why would the dollar rally against all of currencies based on, and not just the euro, when the big news is concerning the euro?
Yeah, but you see, one of the things I think that a lot of our viewers have to look at is we'll look at euro dollar, all right? But remember, so many of the trades which got the euro at 136, 137, up, was not euro dollar trades. It was euro Polish zloty, euro Czech, euro Russian ruble, euro Turkish, okay, where they were selling that and buying the euro, okay, and then probably moving into the gold market. So I think that's one thing where you have to look at this is a global market. And as we saw, 3-4 months ago, the beating that India took, Malaysia took, Turkey took. So you're seeing a stabilization there. And now it's a situation where, I haven't seen today's GDP numbers, but most people are discounting that. Then tomorrow, are people then thinking, well, maybe non-farm payrolls won't be as bad as expected. My call is 135. I think the Bloomberg consensus is 125. I think it would have to be like well below 100 for the dollar to come under. But what happens if it's 150 to 200,000? So I think people are positioning for a medium to possible upsize surprise tomorrow in non-farm payrolls.
Right, and so the normal sort of monthly numbers around 175, is it? And
no, 125.
I know that's the consensus, but normally it's much higher, and that's because of the shutdown they had last month.
Yes, and then of course.
And so it's a bit of an unknown, really, isn't it? It's quite difficult to estimate.
It's truly, a guesstimate.
Yeah.
Truly a gamble. But I mean, the key thing is that for some of our younger viewers, non-farm payrolls used to be extremely important. But remember, we've had interest rates since March of 2009 unchanged. And I mean, I've been in the market for more than 40 years. I mean, I've never seen interest rates this low, okay? Nor have I ever seen inflation this low. So there's no global inflation. Interest rates, and the interesting thing is we will wait to see, again, next week, extremely important on what the Bank of England, their November inflation report. Because if we go back to the August inflation report, again, Mark Carney, and remember in July, his first meeting, they actually issued a statement, the first time the bank had ever issued a statement, when nothing happened. But they say we are looking at the situation, etc. And again, both at the August inflation report, he basically reiterated mid-2016. Well, as we've seen, the financial markets are saying, what do you mean 2016? We're talking mid second or third quarter of 2015. And now, after today's, the UK data we've gotten in the past month, are we talking early 2015? So it's going to be quite interesting to see what the Bank of England says next week.
Yeah.
Are they going to increase growth? Again, no inflation. And then, of course, we don't get the minutes for about 10 days. But it'll be quite interesting to see how much of a discussion. There was no discussion at all about more QE or raising interest rates. The key is going to be is, hey, Charlie, what do you think? Well, Fred thinks such and such. And I think the consensus now with the market, although sterling is getting hit because it's about a dollar rally. But it really is going to be interesting to see, and my feeling is the first major global bank to raise rates, albeit slowly, will be the Bank of England. Probably late first, early second quarter of 2015.
2015.
Yes.
Now we've got Twitter going.
Moving right along.
Yeah. What are your thoughts on that? You don't seem that interested.
No, not at all. Okay. I mean, I'm sort of with Mark Zuckerberg. 18 billion. What? Who's going to pay for it? Stephen Fry and all of his 2.8 million friends? Yeah. I mean, you're going to reach a point where, how much freebie can you get? I mean, if you start to use something for free, even Twitter's going to say, well, when are they going to start charging?
So you don't think it's got any commercial scope at all?
I don't, but you see, I'm not a member of the .com boom, right?
No. Okay.
So
if you were a reviewer, you'd be selling as soon as you could.
Well, I wouldn't have bought it, so
But you're going short.
Well, I don't trade stocks. I invest in stocks. Okay. I mean, I was lucky enough to get my 227 shares of Royal Mail.
Yes.
No, I did not sell it. I bought another 2,500 at a little bit under 400p, and I'm waiting for 750 to 1,000. I've put in my allocation for Merlin. I'm also looking for Pound Land next year. I mean, these are companies to me that have value. I don't know what value Twitter has. I don't do Twitter. I don't do Facebook. Yeah. I have a dial telephone on my mobile. Yeah. Okay.
So it's you would invest in things that you can relate to and things that you use in real life.
Yes, exactly right. Okay.
So the market, the equity markets have rallied on the recent ECB and BOE news today.
Yes.
Where are we going with those? Are we going higher?
We want higher.
We're going higher?
Yes. I mean, Alan Greenspan, former chairman of the Fed, came out with a book about 10 days ago, basically saying from a historical perspective, the global stock markets, and especially the US stock markets, based on EBITDA, price-earnings ratio, inflation, they're not overvalued. And one of the things that you'll start seeing is that where you are not getting the major flows in the US or some of the global stock markets, because, again, the Federal Reserve, the question is whether the stock market may depend on whether the people feel, will we have December tapering or will we have March tapering, okay? If it's March tapering, people will continue to buy the bond markets. Yeah. And we'll look at value, okay, in the stock markets. But as you can see right now, and you probably don't remember, the manic late 80s when you could have floated, ilovemymother.com, and it would have been overbought. So it's a situation right now, but it was a great Royal Mail. It's going to be interesting to see how is Twitter going to be a Royal Mail type, or is it going to be a Facebook?
But Royal Mail's not the future, is it?
Well, I think it probably is. Not so much from mail, but from delivery, okay? I mean, that's where, I think it's TNT or something like that. I mean, that's
they haven't got a monopoly in parcels.
No, of course not.
Which they do in stamps and letters.
When was the last time you wrote us a letter? Dear Santa, please bring me.
That's the point. I don't really write letters.
Yeah, neither does anybody else. I mean, I didn't buy Royal Mail for mail. I bought it because of their delivery process. Okay, they're very strong, and they will be competitive, and that's what I bought.
In the parcel and
yes. Yeah.
Okay, because of their infrastructure they've already got.
Yes.
Okay, I think that's almost covered what I wanted to ask Bill, unless you've got anything else.
No, I think, but the key thing is, tomorrow, again Friday, November the 8th, non-farm payrolls, an extremely important number, and then next Wednesday, here in the UK, the November inflation report, extremely important.
So we still keep our eyes out for Wednesday. I mean, Friday and Wednesday.
Yeah, that's key to see, what we can talk about.
So if inflation comes out above or below par, what are the implications?
It'll be below. I mean, there is no inflation, okay?
But below what is expected. So there'll be there's an expected number, I guess.
Yeah, and I mean 2% is the number, but that's kind of a meaningless number. And I mean, even we saw today. I mean, even Draghi was saying that they were surprised in October how inflation was so low. And I mean, even now, I mean, you've got oil prices continuing to go down, gold is down. You know, the only real pressure is like in food prices, okay? And that's only because wages are going nowhere.
It's really good.
Except for you boys are here at Capital Spreads.
All right, well, thanks very much for watching this week's video, and we'll see you again next week.